So let us look at the following illustration. Professor Dog is a Nigerian resident. Professor Dog, a Nigerian resident, had a total Nigerian income of 250,000 naira in 2010, from which 25,000 naira had been deducted as a payee from his salary. He also earned 100,000 naira from Ghana, from which 5,000 had been deducted as a tax by the Ghanaian authorities. You are required to compute the total Nigerian tax, the double taxation relief, and compute the next net tax payable. So solution. Start by taking the name of the taxpayer, Professor Dog, and what you are asked to do. So computation of total Nigerian tax and the year of assessment for 2010 tax year. So first we compute, we take the total Nigerian income as given in the question. Okay, we can just use a single naira sign and not 1,000 naira sign. That is 250,000 naira. Then income from Ghana, $100,000. So there is a total income of 350,000, otherwise called the global income or the worldwide income. Since Professor Dog is a Nigerian resident, he will be entitled to a relief, and now that we are talking about 2010, it will not be subject to consolidated relief. So we have the global income, then relief, personal allowance, and the personal allowance as at that time is 5,000 naira plus 20% of earned income. That is 20% of 350,000, which is equal to 775,000 naira. You deduct it. So we now have a taxable income or chargeable income. Chargeable income of 275,000 naira. 275,000 naira. So we base the tax rate on a 275,000 naira. So tax computation. First, 30,000 at 5% is equals to 1,500. So we have next 30,000 at 10%, 3,000 naira, And we'll have a next 50,000 at a 15%, which is a 7,500. And we'll have next 50,000 at a 20%, which is 10,000 naira. And above 160, just take the amount 275,000, I beg your pardon, minus 160,000, then multiply by 25%, and you have 47,500. You have a 28,750. So total is 50,750. That is the total tax payable in Nigeria. So we have to compute the Nigerian rate. So, and that one will be computation of double taxation relief. And in computing double taxation relief, the first thing you are going to do is to compute the Nigerian tax rate, or the Nigerian rate, which is 50,750 all over the income, global income, 350,000 times 100 over 1. Is equals to 14.5%. Next is to compute the Commonwealth rate, and the Commonwealth rate is the foreign tax paid. Foreign tax paid 5,000 all over foreign income, 100,000 times 100 over 1, and this is 5%. So number 3, half of Nigerian rate. Half Nigerian rate will be 14.5% divided by 2, and that is 7.25%. Since Commonwealth rate is higher than half of Nigerian rate, therefore the relief, double taxation relief, will be half of Nigerian rate. So 3, or Roman figure 3. We have been using Roman figure. Okay, this one should be Roman figure 2. Roman figure 3. Computation of a tax payable. Nigerian tax payable as computed here, that is 50,750. 50,750. Then double taxation relief will now be foreign income, 100,000, multiplied by the double taxation rate. Commonwealth rate is lower than half of Nigerian rate, not high. It's lower than half of Nigerian rate, so the relief will be Commonwealth rate multiplied by 5%, and that is 5,000 naira. So we have 45,750 as the balance, and from here we are going to deduct the pay as you earn that has already been deducted. Tax already paid in Nigeria, that is 25,000. So we have tax due. $20,750. Because in the question we are told that 25,000 naira has been deducted as a pay as you earn, payee. So the tax due is now 20,750 or 20,750. No, 20,750 naira. Now let us look at the tax reform and answer this question based on the 2011 Personal Income Tax Act reform. And for the purpose of that tax reform, we are going to change some figures here. This one will become 250 million, and the tax will be 25 million. Foreign income will be 100 million, and the tax will be 5 million. Having made that adjustment, we call it solution B. The global income will be Nigeria income, which is now 250 million. We can raise it to this power. Then income from Ghana is now 100 million. So we have 350 million as the global income. Now we're supposed to have consolidated relief allowance, and the consolidated relief allowance is 200,000 naira plus 20% multiplied by gross income, which is the same thing as the global income, 350,000. So this one will give us a 70,200,000, and when we less it, we have a 279,800 as the chargeable income. On the chargeable income, we now less for tax computation. First 500,000 at 7%. Then have the next 500,000 at 11%. Next, the first 300,000, then have next 500,000 at 15%, and next 500,000 at 19%. Next, 1,600,000 at 21%.